It's time to talk business. We now start off the news at this hour with the latest inflation reports for the month of August this year. Nigeria's headline inflation rate has hit a new 16-year all-time high, surging to 20.52% from the 19.64% recorded in the month of July this year. On a month-on-month basis, the headline inflation rate in August 2022 was 1.77%. This was 0.05% lower than the rate recorded in July. This shows that the headline inflation rate increased in the month of August when compared to the same month in the preceding year. On a year-on-year basis, the urban inflation rate was 20.95%. This was 3.36% higher compared to 17.59% recorded in August 2021. The rural inflation rate in August was 20.12% on a year-on-year basis, and this was 3.69% higher as compared to 16.43% recorded in August 2021. The food inflation rate in August 2022 was at 23.12% on a year-on-year basis, which was 2.82% higher compared to the rate recorded in August 2021 of 20.30%. And this rise in the food inflation was caused by increases in prices of bread and cereals, food products such as potatoes, yam, and other tuber, fish, meat, oil, and fat. We'll keep our eyes on that story and bring you details subsequently. The Speaker of the House of Representatives, Mr. Femi Gbajabiamila, has disclosed that President Muhammadu Buhari will present the proposed 19.79 trillion budget for the 2023 financial year before the two chambers of the National Assembly in the first week of October 2022. Mr. Gbajabiamila, who made the disclosure of the 2023 budget presentation during the inspection of the ongoing renovation work of the Green Chamber as well as the construction of the National Assembly Service Commission office, said the temporary chamber would be ready for use when the House resumes from its 2-month recess next week Tuesday. The Speaker also revealed that the 10th anniversary of the Assembly, would most likely be inaugurated in the temporary chamber, except the project managers would be able to complete the renovation of the main chamber months before the scheduled deadline. Nigeria's exports in the second quarter of 2022 were dominated by crude oil, accounting for 80% of total export revenue despite the huge oil theft recorded in recent times. And that's according to data from the National Bureau of Statistics' latest report on mechanized trade, which shows that crude oil export is valued at 5.9 billion naira. A Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, Mr. Melekari, had revealed that the country had in recent times recorded an increase in the activities of pipeline vandals, resulting in a rise in crude oil theft. Mr. Kari said 295 illegal connections had been located around the pipelines, which led to the shutdown of oil production. And to other stories now. Total deposits in commercial banks across Nigeria rose by 24.17% from 33.85 trillion naira as of the end of June 2021 to 42.03 trillion naira in the corresponding period of 2022. Deputy Governor of Financial System Stability Directorate, Mrs. Aisha Ahmed, disclosed this in her personal statement at the last MPC meeting. She also said results of stress tests showed resilience of bank solvency and liquidity ratios in response to potential severe macroeconomic shocks. A member of the MPC, Mr. Falushodun Shonibi, said the financial sector recorded some significant growth during the period, including deposits in the commercial banks. Into global markets now. Asian stocks markets were steady but fragile today, a day after their biggest drawdown in 3 months, as investors weighed the risks of the Federal Reserve announcing a 100 basis point interest rate hike next week to tackle sticky inflation. MSCI's Broadest Index of Asia-Pacific shares outside Japan rose at 0.4%, while Japan's Nikkei rose at 0.3%. Now, one bright patch on today's trading was China's beleaguered property sector supporting the lifting of Hong Kong Seng, which rose at 0.8%. On the currency markets, the dollar stood near recent peaks on today as markets increased its risk that the Fed has more work to do in its aggressive tightening streak to curb red-hot inflation, while weariness of intervention kept the yen steady. The New Zealand kiwi jumped at 0.2% to trade for $0.60 as official data showed gross domestic product rose 1.7% in the June quarter, beating forecasts of a 1.0% gain. The sterling was down at 0.05% to trade at $1.153, while the euro slipped on 0.06% to trade at $0.9972. Both nursing losses after an inflation surprise sent the greenback surging on Tuesday. However, the dollar is in the driving seat ahead of next week's Fed meeting, and Fed funds futures are pricing in a 37% chance that the Fed will hike rates by 100 basis points. Well, let's stay in Asia, where China's exporters, the last reliable pillar of the world's second largest economy, as it struggled with the pandemic, weak consumption, and a property crisis, warning of hard times ahead as of softer overseas markets forced them to shed workers, shift to lower value goods, and even rent out their factories. Alarm bells sounded for China's $18 trillion economy when trade data last week showed exports growth well short of expectations and slowing for the first time in 4 months. Now, those alarms are echoing in workshops across the eastern and southern China's manufacturing hubs and industries, from machinery parts and textiles to high-tech home appliances, where businesses are scaling back while export orders dry up. And finally, oil prices of international markets fell today as expectations of weaker demands and a strong U.S. dollar ahead of a potentially large interest rate increase overweighed supply concerns. Now, West Texas Intermediate crude recorded a price decrease of 0.97% to sell at $89.62 per barrel. Brent crude futures now sell at $93.16 per barrel, registering a downward price margin of 1.0%. And Bonnie Light's performance recovered from the red zone with a price uptick of 1.84%, selling at $95.86 per barrel. For the OPEC basket, crude oil dealers offer $84.03 per barrel, recording a decline in price of 13.71%.